on Business Incorporated today. National Bank of Ethiopia proposes $150 million as platform license fee. A new sorghum hybrid with 25% increase in yield released in Zimbabwe. We'll give you an update on the Naira scarcity in Nigeria. Good afternoon. Welcome to a new week. It's Business Incorporated here on Channels Television. We're giving you updates from the world of business around Africa. We're beginning from, well, here in Africa, where the markets we see trading mostly or mixed in Africa. But the good thing is the NGX has recovered, though very marginal. Let's look at the numbers now. The Nigeria NGX of the Nigeria is up slightly, 0.01%, while Jersey is better at 0.29%, 79,498.31. We're celebrating this 80,000 for the JSE last week, but unfortunately we lost that now. And the EGX of Egypt is 0.80% in the red at 17,188.17, while Kenya, for a change, is positive as at Friday. Now let's delve into the NGX, that's Nigeria's trading stock exchange floor now, and find out what's going on at this time. If we still have that marginal trade, we have Akoshile Oluwasomi, investment research analyst with Investment One Financial Services Limited, joining us to give us intraday market numbers. Hi, Akoshile, good afternoon. Are we still doing this marginal positive? Is that what the market is looking like at this time?
Yeah, thank you very much, Ine. My pleasure. Market is marginally up by 0.01%. Obviously, we are seeing good buy interests, particularly on GT Coal and some other banks, UBA. We're also seeing on Fidelity, right? Recall that last week we saw a bit of sell-offs on this TCAS, right? And obviously that may not be unconnected with investor sentiments, probably as regards the cash crunch, that the economy is facing, and how they feel it could affect, the banks in particular, right? Also looking at activity levels right now. Volumes being traded right now, a total of about 38 million units, a bit about 20% lower than this time last week, Friday. Also with respect to value, a total of about 700 million naira worth of stocks have been traded so far as our intraday. Also lower than what we saw this time last week, Friday, right? And the dampened activity may not be unconnected with the fact that, it's the election week, the highly anticipated, presidential election week, and obviously the uncertainties around what's been happening within the economy and how, the elections would pan out could probably be, an effect, right, on how activity levels will pan out today and for the rest of the week.
So last week we had one major negative trade on Friday, and that wiped off the profits of the whole week. What's it looking like for you this week, especially for today? Does it look like a positive, a negative?
Yeah, well, for today, right? Just like I mentioned earlier, the elections, are drawing near. For the week, it's expected that the risk of sentiment we saw on Friday would probably still, filter, for the rest of this week, while we have a cautiously optimistic outlook for the equities market this year. The wild card is the forthcoming presidential elections, right? Which we are just a few days to, and it's expected that investors could be, especially investors that are pretty, risk averse. It's expected that they would be probably jittery and would want to book profits, especially those who have been on stocks that have rallied in the last 4 months. Recall that the NGX ASI has rallied, stock market has rallied for about 4 consecutive months, and it's expected that coupled with the uncertainties, right, it won't be far-fetched to say that some investors will be looking to, exit some of their portfolios this week with respect to the major, headwind, which is presidential elections. Also, we'll be looking at GDP numbers that will be coming in 2 days' time. There's a possibility that, we're seeing not very positive numbers, right? And that could also, filter or affect, sentiment in the market.
What about full year earnings, 2022 full year earnings? I think that's trickling in, or where is that at this time?
Oh, obviously. So, I would have said this that this outrightly, right? That this week would, for the markets would end negatively. But on the positive, there are two sides to the coin, really. At this point, we have, the earnings is still on the positive side, while on the other hand, the election uncertainty. So, it's expected that this week there should be a seesaw performance, right, where you have cherry picking by investors clashing with profit takings and sell-offs. So far, earnings have been pretty good, and it's expected that dividend declarations would also come in upbeat. And I also believe that the buy interest we are seeing on some stocks for today, like I mentioned, GTCO, and other tier one banks, right? The sentiment driving that is investors, positioning ahead of, the release, particularly for the banking names and also the industrial sector. So I believe it's going to be a mixed bag because, yes, earnings pretty good. Expectations are that, upbeat. The upbeat performance will be sustained from what we saw last year, despite the negative macroeconomic narrative. And it's expected that, investors will position ahead, especially for those who are, pretty risk tolerant, right? Not minding, what's happening within the economy with respect to the elections, because mind you, elections will come and go and the market will still remain.
All right, we'll try to remember that election will come and go, but the markets will remain. Thank you so much for giving us updates on intraday trading there at the NGX. Akoshile Oluwasomi, investment research analyst, Investment One Financial Services Limited. Thank you for your time.
Thank you, my pleasure.
All right, let's move over to the Middle East, where it was also mixed sentiment at intraday, as we see the numbers right there, with Abu Dhabi positive at 0.03%, 9,979.99. Dubai follows suit at 0.08% at 3,460.49. Looking at all the market, there's the only red that we have in that market, Saudi Arabia at minus 0.03%, but still maintaining that 10,000 level there. Qatar undecided at the intraday 0.00 there. We'll see which way to tilt to at the close of trade. Let's move over to Europe now, where the Munich Security Conference has ended. And over the weekend, there's some news from Airbus concerning the lack of export approvals. It all ties into the Ukraine war. Remember, this week marks the first anniversary of that unfortunate war, Russia's war in Ukraine. 12 months that have changed security politics in Europe and the outlook for the defense industry as well. We have Lars Holter now is joining us from Berlin to give us details of those conversations over the weekend with Airbus and all of that. Hi, Lars. Good afternoon, and thank you so much for your time. Well, Airbus is in the news now. Of course, it's connected to the defense industry and, of course, the war, which is still ongoing. Give us updates on that.
Well, things are not going all too well, actually. Airbus says the German government is very slow to approve defense exports. They say the company has received billions worth of orders for its military transport plane, that's the A400M, but that they can't take any of these orders yet because they have to be green-lighted in Berlin. And that, of course, is due to very strict oversight over military contractors in Germany. However, Airbus, which, of course, is a multinational owned largely especially by Germany, France and Spain, is afraid that several countries who have now ordered these planes might just take their business elsewhere if they can't get an assurance on delivery. After all, these are tense times that we're living in, and many countries are investing in their military, and likely with some timely pressure. So Airbus chief Michael Schöllhorn has urged the German government over the weekend to speed things up. He did so, of course, as high-level representatives from many countries met in Munich for the security conference there.
All right, so what is the long-term expectation of this? We know the wars lasted for 1 year now. That may not be enough for them to have. How do they adjust to all of this? What do they see in the long run?
Well, in the long run, Airbus and others are quite optimistic, and there's a very strong reason for that. Russia's war in Ukraine has led many countries to invest strongly on security and defense, and Germany in particular wants to ramp up spending too. Chancellor Olaf Scholz has a while ago coined the term of a Zeitenwende, a tide change, and he's given the German military an extra 100 billion euros to invest in programs like new tanks, weapon systems, planes, and so on. Also, Germany's defense secretary Boris Pistorius has just said over the weekend once again that in the future Germany will adhere much closer to its 2% target with NATO than the country had done before. That means that 2% of Germany's gross domestic product is to be spent on the military. That would mean there's a lot more investment in defense. However, as I pointed out, things are moving slow, and so the problem for Airbus as well as many others in the sector is that so far there has been a lot of talk and not much action.
And how is all this playing out in the stock market?
Well, defense stocks have been on the rise for quite some time. One in particular is Rheinmetall. That's one of the makers of the Leopard tank system. And those are the tanks, of course, that Germany is supplying to Ukraine to help forces there defend the country against Russia. More importantly, though, the last couple of months have brought quite a change for defense stocks in general. They've never been talked about much, as they've often kind of been seen as part of a dirty business. Many private investors, for example, shied away from the sector. They didn't want to have defense stocks in their portfolio. But ever since Russia invaded Ukraine, that attitude has changed. The entire military complex is now seen somewhat, I might say, as a force of good, as it's necessary to secure democracy in Ukraine. Of course, shares in the sector have also reached pretty high levels at this point and are not necessarily the bargains they were about a year ago. So on a day-to-day basis, looking into this week, for example, the sector is not seeing that much action. It's not seen as much of a market mover anymore, but it has gone through quite some changes.
All right, thank you so much, Lars. I do know that all through this week we'll be talking about that anniversary, 1 year of Russia invasion into Ukraine and the long impacts on different countries. Now let's move over to another market, Asia-Pacific markets. They were mostly high on Monday as investors look ahead to a batch of economic data later in the week, including minutes for the United States Federal Open Market Committee. Let's see the details of it. Now the Nikkei 225 in the green, 0.39%. The Shanghai Composite also in the green, really good there at more than 2%, 3,290.34. The Hang Seng Index also looking good, 0.85%. I'm hitting to 21,000 there for the all-share index. The Kospi marginally up, not looking as good as the other ones at 2,453.15. And looking at the other parts of the market, the Shenzhen Composite, it's a green market for Asia today, and topics also in the green. Australia, the AX 200 slightly up 0.06%. Now let's move over to Nigeria, and of course the hottest topic at this time in Nigeria is the issue of the naira, the redesigned naira, and what's happening with the circulation of it. We do know that of course last week there were series and pockets of protests because of the frustration of a lot of Nigerians who have not been able to get it. And we did get that order from the Association of Senior Staff of Banks and Insurance that their staff should stay safe and may not be going to work. But this morning on Business Morning, we had the president of the association join us for a conversation and assuring Nigerians that they're happy with the response from the security arm of the country, and of course what the government has been saying. And so because of that, they've removed that withdrawal order of the staff of banks, so banks can be open. But of course, as Nigerians, we do need to stay focused on the election and not take matters into our hand or get violent. But let's listen to the president of the Association of Senior Staff of Banks, Insurance and Financial Institution, who was on Business Morning earlier today.
The biggest challenge we had was that since the attack started, we didn't hear any condemnation at government level about the attacks, and it was worrisome to us. I know in the kind of environment that we are in, when there is that kind of silence, it's like a silent endorsement of those attacks, and it spurs them on to go on, because for them, they've been incited, they've done it, nothing has happened, and they're happy to go back to it again. Our members are also under a lot of pressure. I mean, you see the crowds that are in front of banks, you see the crowds that are in banking halls. Our members, since last year, have been working 7 days a week to ensure that they're able to serve customers. So, when you are faced with that physical stress, and then you now add the mental trauma based on the threats and the attacks that they've been experiencing, then you can now put everything together and have a clear idea of what our members are also facing presently. When the redesigned policy was announced last year, we came out and we mentioned that there could be a crisis simply because stakeholders that would be involved in the entire process of execution were not carried along. So like many have said, it's a good policy. The challenge that has been with that policy is the level of execution. We need to be sincere with ourselves. Execution was poor. And the only reason execution was poor was because there was no engagement to look at all the pros and cons, to look at the possible challenges. I mean, we should look at the whole policy as a project. And when you do a project, there is a plan. You need to envisage all possibilities and have plans in place to be able to address those possibilities.
And so we'll take a break now. When we come back, that Ghana debt program is also causing some scuffles in the country. But we'll get updates on that after this break. Welcome back. Still watching Business Incorporated here on Channels Television. The Payment and Settlement System Director at the National Bank of Ethiopia, the regulator, is proposing $150 million fee as an investment protection fee. This fee is described as the amount paid by foreign nationals who invest in businesses exclusively reserved for domestic investors or the government. This draft law opens the way for discussion on the progress of Safaricom's application to launch mobile money services in Ethiopia. The new directive also increases the amounts that can be held in digital wallets level 1 accounts that are subject to a maximum daily electronic account balance of 10,000 birr and an aggregate daily transaction limit of 20,000 birr. Since entering the Ethiopian market, Safaricom had indicated that it was looking to introduce its mobile money services, M-Pesa, into the country. This was never the case, as the license issued to Safaricom only allowed the company to compete against state monopoly Ethio Telecom. It couldn't offer its revolutionary money remittance services due to legal limitations. And in Zimbabwe, farmers are poised for greater yield and income gains as a result of a recent agricultural innovation breakthrough, the release of a new hybrid of white sorghum, great millet, that also promises greater resilience to erratic rainfall. Collaboration between the International Crops Research Institute for the Semi-Arid Tropics and the Pan-African Seed Company, the Seedco Group, resulted in the development of the new variety that has yield potential of up to 8 tons per hectare, offering farmers a 25% yield increase over existing varieties. Dr. Jacqueline Hughes, Director General of the group, said that the release of this new sorghum hybrid is a significant achievement resulting from innovative research conducted through the Sorghum and Pearl Millet Hybrid Parents Research Consortium. Seedco Global Research and Development Head said that their partnership strives to bring innovative and high-performing seeds to the markets. From there, we'll go to Kenya, where tea farmers affiliated to the Kenya Tea Development Agency borrowed 8.6 billion shillings, up from 5.1 billion shillings, at the backdrop of tea reforms, registering a 35% growth for the period between June and December last year. The loans from Greenland FEDHA, a subsidiary of TI Agency, attributes this growth to the reforms that saw the interest rate to loans reduced from 21% to 8% in a move aimed to ensure that small-scale tea farmers and others who join the microfinance institution have access to affordable credit in order to boost their farming and ease existing debt pressures. The reforms have greatly contributed to this, as well as good and affordable credit offered to the tea farmers to a CBR plus 1 for 6 months period, unlike the previous year where it was only for 2 months, which was November to December 2021. In Egypt, the government has released $3.7 billion worth of goods from ports during the period from February the 1st to 18th. That's according to Egyptian cabinet spokesperson. Prime Minister Mustafa Mudbi had a meeting with Central Bank of Egypt's Governor Hassan Abdallah, Minister of Trade and Industry, and a number of officials to follow up advanced cargo information system. They stressed that they will continue keenness on efforts to facilitate customs release operations in various Egyptian ports and shorten the release time for imported goods and materials. In addition to that, they will facilitate a trade movement with continued periodic and a follow-up by responsible authorities in a way that contributes to activating the work of the system. Well, we did tell you that we'll give you updates on that Ghana debt program. And we can tell you that some of those bondholders have started picketing the ministries today, Monday, and they hope to sustain it over some time. And remember that Ghana faces the risk of defaulting on one of its Eurobonds, saying that private foreign creditors may have to accept less favorable terms than bilateral lenders in the country's $30 billion debt restructuring. According to the finance minister, a speedy process with the bilateral creditors is needed to pave way for the discussion with private creditors as the country races against time to secure the $3 billion IMF loan by March next month. Already, domestic individual bondholders have started picketing today, and we do not know how long that will last for. Well, that's the program, this very first working day of the week. Thank you so much for being a part of it today. We do have 4 more to go. Please stay with us here on Channels Television. You've been watching Business Incorporated. I'm Ini John Mekwa. Enjoy the rest of your day.